Russell, welcome to the podcast, mate. Broker Podcast.
Thank you very much.
And you probably know that we've only just sort of kicked it off. We only had a couple of episodes, and I would be remiss of anybody to do a podcast in relation to the broker market without talking to Mike Russell. End of story.
Thank you very much.
And a couple of others, of course. I guess maybe first things first. Let's not talk about what you're currently doing, and we'll talk about that in a moment. But maybe we just give some of our younger listeners a bit of a flavour of who Mike Russell is and what he's done in his past.
Yeah, sure. So was fortunate enough when I finished university to jump onto a bank graduate program for 2 years, and following that was a banker, a retail lender, commercial lender within ANZ, and fortunate enough when the banks deregulated in the mid-80s, got the opportunity to jump over to a new bank, National Mutual Royal Bank, and I probably cut my teeth, so to speak, with that particular bank. So look, a long-term banker, and then jumped over to mortgage broking a little over 20 years ago, and haven't looked back.
And who was that you jumped to?
So Choice Aggregation was, I was managing director of that organisation for 7 or 8 years and thoroughly loved that time. Sold to Challenger Financial towards the end of 2008, really in the midst of what was developing into a fairly decent crisis, as we know. But I guess timing is everything, and we were lucky to get that sale away, and then sat on the bench with a restraint for a little under a year, and then took the role of CEO of Mortgage Choice, and was lucky enough to have that role for 6 years during the glory days of Mortgage Choice, and thoroughly enjoyed working with franchisees and making that transition from aggregation into franchising. And I was very naive when I was running an aggregation business. I really didn't understand why anyone would join a franchise when they could be part of an aggregation business, perhaps on higher commission share. But my eyes were really open to the benefits of franchising and transitioning more from a mortgage broker to a business owner. And so third time around, when I decided to move back home to Melbourne, I wasn't done, and I'm not done. And third time around, it was a fairly easy decision for me to re-enter the franchising environment.
So that's an interesting one, Mike. We're both in a sort of similar sort of game, but in terms of business model. But explain to our listeners or our broker family, why do you think it's a natural move from being a mortgage broker, presumably working for a larger firm? Why is it a natural progression to go from there to becoming a franchisee, when the obvious question will be, hang on, I get more commission as a broker than I would as a franchisee? Maybe explain that transition. Why do you think it is a natural evolution for a mortgage broker?
Yeah, look, I think all mortgage brokers, whether they're employed as mortgage brokers for a business, or if they're working in an aggregation environment and they have a direct agreement and they are a single mortgage broker, one of the challenges that aggregation businesses have, they're very good at providing tools of trade and compliance support, but what they're not good at, because they will say they don't do it, is helping people transition from becoming a mortgage broker to a really successful, thriving business owner. And what franchisors do well is they lay a pathway. They know what they need to do to transition someone from a mortgage broker who aspires to be a business owner and manage staff and step change their business when that opportunity arrives in their business. And I guess that's what you, myself, the Simon boys, what we know is how to assist people create thriving businesses where they themselves can really work on the business more than just in the business. And, we teach them the soft skills about, how to go about marketing in their local community. We teach them how to go and prospect and secure good referral partners. We teach them the self-discipline of doing what they don't like doing. And that's particularly pertinent for bank managers, for example, who, we love recruiting bank managers into the franchising environment because they already have secured or got hold of that professional competency of home or business lending. But what they need to be taught is how to become a business owner, all those soft skills that are very important. And the one thing that the big challenge for bank managers or bank lenders is that the banks force upon them to do the things that they don't particularly enjoy doing, those essentially prospecting and marketing that they must do in an employee relationship. But when they come out into their own business environment, unless someone like a good franchise is able to teach them to be accountable to doing the difficult things that they were told to do that they didn't like. And, that's one of the things that in a franchise environment, we teach the things that they've got to be accountable to be successful.
That's sort of, like you, we get a lot of ex-bank managers or retired guys or redundant guys or girls coming in as our franchisees. I'm going to give you an opportunity, mate. Tell us why someone should join MoneyQuest. Tell me what are the advantages of joining your brand or your branded broker business?
Yeah, look,
as a franchisee.
Thanks for the opportunity. And look, rather than MoneyQuest, look, we have a fabulous service proposition, as do a lot of great franchise businesses. I think the one thing that MoneyQuest, and I'm sure Yellow Brick Road and others take great pride from is that transitioning of a great mortgage broker to an even better business owner. And you need systems and policies and procedures and all of that. But what you need is the willingness of people within your franchise business to sit down and roll up their sleeves and do a business plan with you, and then monitor that business plan at whether it be weekly, fortnightly, monthly, until we're comfortable that you've got hold of it, and then to write you a marketing plan and help you, be there with you to execute that marketing plan and teach you the importance of putting rocks in your diary each week, even if it's 3 hours Monday from 10 a.m. till 12 noon. I'm going to get on the phone and do my prospecting and marketing. What we don't like is, we don't like looking at settlement graphs that are like jagged shark teeth, which show that this month, wow, my settlements were really strong, and then they fell. Why did they fall? Because when you were busy writing loans, you forgot to do the prospecting and marketing. You said, I'm too busy for that. So what happens is, guess what? You pay the price of not doing your prospecting and marketing every week. And what we teach our franchise owners is businesses rarely see big step changes. SMEs generally see really good, well-run SMEs see really good lineal growth, and we try to teach really good lineal growth. Now, inside that lineal growth, it will mean that business owners will need to step change. They will need to step change when they think about putting staff on. They will need to step change when they want to ramp their marketing. And by step change, I'm talking about that will probably come at a cost, a temporary cost to their bottom line. But we give them, I guess, the encouragement and the knowledge and the wisdom that it's okay to invest when you need to invest, and don't underinvest. The single cause of why mortgage broking businesses fail to achieve their true capacity is they're either undercapitalised through circumstance, in which case we can't hold anything against those people, or they're undercapitalised through choice. Now, those businesses that are undercapitalised through choice i.e., when it's their time to go in AFL parlance, you've got to go back for the high ball. When it's your time, when you have that opportunity to step change and you don't step change, i.e. you don't invest in your business when you should, guess what? You've missed the opportunity and you've only got yourself to blame.
Well, two things. Can I just stop you there for a second? Because two things I just got out that I think is really important to cover off, for you to cover off if you can. You just said when to invest,
yes.
and obviously there's an amount of money you have to invest.
Yes.
But if I go back, sort of dig a bit below that, what would you say a franchisee or a mortgage broker going into business as a broker as a person in the business of broking mortgages, as opposed to just being a mortgage broker, which is just transactional. In other words, a person going into that business, whether it's a franchise for your business, for MoneyQuest, or for Yellow Brick Road, or whoever it is, it doesn't matter. How much money do you reckon they need to have as working capital in their back pocket? I mean, and I know it's a bit of a fungible question because it depends on a whole lot of stuff, but what is a minimum amount of money that someone would need to have to get them through those periods when they're not writing deals, but they're investing in their business, and they're still maybe paying a receptionist or paying some rent or whatever they're doing? Yeah. We're talking about 30 grand, 50 grand? What do you reckon is a fair amount of money they should have in their head?
Yeah, no, look, it's a great question, Mark, and I'll answer it this way, that it largely depends on who the individual is, whether they're just supporting themselves or whether they're supporting a spouse or whether they're supporting a family. Because as you and I know, when you start a business, you can earn an income from day one, but from a cash flow perspective, the way we have to wait until properties settle and lenders pay, there is a valley of despair, as we call it, before they can start to see money coming into their account. Now, that valley of despair we assess very carefully by doing we do a 6 and 12 month cash flow forecast, and it will largely depend on whether they're aspiring to work from home office, or retail premises, what their aspirations are. But look, anyone with kind of less than $50,000 as a rule of thumb is going to struggle. But what we find is that certainly bankers leaving a lending role there where they might be paid, $150,000 for argument's sake, they're not really going to see significant cash monies in their account for 6 months or so. So rule of thumb might be they need access to $75,000. Now, if they don't necessarily have access to that, we are able to assist them attain access to that, and there's a number of ways we can do that to help them. To the right people, we will help them, or we will refer them to people that can help them. But something like $75,000 is something to be comfortable. But one of the things that I was going to turn around and say, look, it's a really open question, how much do you need? But I recently spoke at a closed session of the MFAA where a number of leading brokers, they wanted me to talk about how much should I spend on my marketing, and overall what percentage of my turnover should I spend on marketing, and how much should I spend to acquire a new client, recognising that a new client, an upfront commission might be a couple of $1,000. How much should I spend to acquire? And my session was very focused on whatever you're spending now, quadruple it. So whatever you are spending now is definitely not enough, and you should quadruple it. And the reason being is, I mentioned at the outset, there are fundamentally one reason why brokers fail. Forget the professional competencies and the soft skills and the business planning and all of that. They're not investing enough in their business, and that's because we as old heads in the industry, we haven't taught them enough about client lifetime value. And one of the things that we stress is don't benchmark your investment decision against that upfront commission. Benchmark your marketing investment decision against the lifetime value of a client. Because if you're any good, the industry on average, On average, the industry, an average broker would have a 50% chance to write a repeat client at the end of 5 years. And they have about a 25% chance of writing a referred client. So if you apply those industry averages over let's say a 3-year loan, so a 15-year term, most brokers would look at certainly not intending to be in the industry less than 15 years. If you apply an average home loan of $450,000, a repeat percentage at the end 50%, in 10 years that's 25%, in 15 so on. A client lifetime value before being present valued is around about $14,000. Now, if we present value all those discounted upfronts and trail commissions from that one client, if we present value it back today with such low cost of capital, the present value is going to come in at around $11,000 to $12,000.
So just be clear. So let's just tell everyone what you've just said though. Yeah. You're saying the present value of the future income from that particular client is about $12,000 today.
Yes.
Which is when where you're going here is how much money will you spend to buy $12,000 worth of value?
That's it, Mark. And when you start talking to a broker and saying, look, this is how we arrive at the value of a client, and you give them confidence. You've got to give them confidence, and I've had actuaries prepare some things. We show them. We say, look, we've been working with brokers a long time, and you can have confidence. I think you know your stuff. You present well. If you follow some of the things we share, you should be able to achieve 50%. And then you're looking at every client. You've got to look at them as $12,000 in a relationship perspective and not $2,000 in a transactional perspective. And don't forget, I learned banking, it was all about relationship banking. Banking now is transactional. Mortgage broking must be relationship. So if you kind of back yourself in a little bit and you want to write that down a little bit, how much would you spend to acquire a client, potentially worth today $10,000 to $12,000? And you've really got to look at that, because the big franchise groups of, Yellow Brick Road, Mortgage Choice, Aussie, the big groups, they would spend in terms of their marketing almost as much as probably 3 or 4 times their earn on that first loan they write. And that we can...
First transactional amount, you mean?
Yes,
first transaction.
For that transaction, for that first loan, because we can do that.
Yeah, we do that. 2 years. We say 2 years to recover our first payment.
Beautiful. And and if you share that, and people say, hang on, you're investing and you're not going to get your money back for 2... But our franchisees don't think that way. So when you start to educate them like that you need to be investing a sufficient amount to be able to crush your local area and to be able to dominate your local area in terms of marketing and prospecting, you do get a different result. And in our business, it's only 5 and a bit years old franchising. We're already over 3 million in individual credit rep at the moment, and it's something that
per month,
yeah, and it's something that I really want to do this time around. I've done the aggregation, which was 1,500 brokers, and here was the productivity, and then I've done this. Well, I honestly believe this time around, productivity is the way forward, because we want to work with less people doing a hell of a lot more. And that's just through education and coaching and guidance and giving them comfort. But you said it then. You'll invest, not expecting your return for 2 years. It's that same sort of logic that you've got to pass on to your business owners. But anyway, I can talk about that for hours. And sorry to ramble on.
No. That's good value. So, Mike, why are you so passionate about? The mortgage industry and franchising, or getting someone to become get into the business of broking as opposed to just being a mortgage broker. Yeah. Why are you so passionate? I know you don't need to any longer. You could have, you could probably retire happily somewhere. Why are you? What's the deal? What is it that draws you into this?
I'm still learning and still evolving. And, when I was, it was the most exciting time of my life when I was 25, 26 and appointed a branch manager in ANZ, to do home lending. I just thought it was wonderful. And then I got approached to go and be part of the deregulation of the banking system when all those wonderful new banking licenses were created. And I thought, wow, that sounds too exciting to not get involved. And then I was part of this movement where, these wonderful new banks, Citibank, National Mutual Royal Bank, and so forth were bringing new products to the Australian mortgage market. City Power and National Mutual Royal Bank bought the first offset account. It was just so exciting, and it was all about the way we challenged the way we were competing against the bank was on service and relationships, and then that was wonderful. But what happened is, the banks flexed their muscles and managed to buy a lot of those wonderfully innovative organisations out. And National Mutual Royal Bank, ANZ acquired them. So for me, it was an opportunity. I did have 5 years out where I bought and sold distressed businesses, and I thoroughly enjoyed that. But then when mortgage broking came about, I thought, wow, this is another step up in terms of really servicing the client, providing a really proud and wonderful... I've got to feel proud with what I do, and I still get a kick out of the service we provide to home buyers and homeowners. It's unparalleled, right? And I absolutely love the service. I love the industry. I think the competition and everything that we provide for the benefit of consumers. But now what I'm really passionate about is, I want really, really competent, clever, right mindset mortgage brokers. I want them to be business owners, and I want them to experience the joy of running a going concern business, and I want them to be able to exit one day without any key man risk. So, one of the things, I have no problems helping people exit their business on big multiples because they've developed this great going concern business where there's no key man risk for a buyer, and when the buyer can come in and go, wow, this is not only is it a great business, but it's part of a great brand and a great system, I'm willing to pay top dollar for that. And I get a lot of joy out of that.
Well, I really appreciate the short time we've had to talk about this, and I think that for any young broker in particular who's listening, and also for anybody who might be working in a bank who's looking to transfer out of the banking system into running the business of a mortgage broker, you've just heard one of the legends of our industry, Mike Russell. His business called MoneyQuest is a franchising business. But I think the thing I love most about what you said, the two things I love about what you said, Mike, two things that really resonate with me is that is turning the transactional mortgage broker into being in the business of running a mortgage broking business. I think that's to me, that's really important. That is a very exciting thing, a thing I love too. But I think the second thing that's really different and refreshing is in this digital age and in this age where banks are just transactional, that you hit on something really important. There's a massive opportunity for those people who are good at building relationships.
Very much so.
Because relationships is what drives consumers, borrowers, to franchisees and people who are in the business of mortgage broking. In the business of mortgage broking means you must be good at relationships. And that's something that's old school, and it's great.
And it's interesting.
And you've got to care. That's right. You've got to care about it.
It's interesting what you say about the digital age and nano banks. You've been in it slightly longer than me, Mark, in third party, but we've been hearing for 20 plus years, you guys must be frightened about the online lenders and the digital lenders and the nano banks, and we've had nothing to fear so far, have we? Now 86 400 and one or two others maybe, but they haven't hit a ball out of the park yet. And providing we can continue to provide great customer service and care, we'll be fine. And it's interesting about the industry; it now has amazing respect. We've got to the point now where consumer recall's high as to what a mortgage broker does. Our industry is a legitimate professional services industry now. And one little plug, and I'm sure others will pick it up. Today we had our media launch we've launched our first graduate program. So we've actually launched a graduate program to tertiary educated graduates, recognising a couple of things that with COVID, the bigger banks and companies, accounting firms are taking on less graduates. So, okay, let's step up and help a few out. But the industry is warranting bringing in graduates. You know, you and I are not getting any younger. The industry is warranting bringing in these young, keen, business-minded graduates, and we absolutely can provide them with a great pathway, great education, great pathway into a great part of Australian business. So we launched this today, and we're hoping certainly in 12 months' time we'll have at least a couple of graduates under our brand in each state, which is pretty cool. And maybe Yellow Brick Road Val might want to follow suit. If you're interested, I'll share our graduate program with you, Mark, because I think the industry needs to get out and look at these graduates as the next phase, possibly.
Thanks, Mike. And you're right, it is a profession. It's no longer like you and I probably remember 30 years ago for punters who just want to get out there and make a quick quid. Yeah. This is a profession. It is a career. Yes. And once you've got into it and you learn your skills, you can turn that career into a business and be a really good, high quality, high value business owner.
Yes.
Which one day is going to be worth a lot of money to you. Mike Russell, you're a legend. Thanks very much, mate. And by the way, anyone listening, Mike Russell, founder and managing director of MoneyQuest. That's a really good franchise business. A great business model. Thanks, mate.
Yours. Thank you. Thanks for being here.